Hello and welcome to TradeFlow Television,
bringing you valuable analysis and actionable intelligence
through the global commodity markets.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Brazilian miner Valesaw said on Monday that its second quarter iron ore production totaled 67.6 million tons, up 5.5% from a year earlier and 13.4% higher than the first quarter, despite the impact of the novel coronavirus. Vale said it was keeping its full-year outlook for iron ore fines production unchanged at 310 to 330 million tons but emphasized that the most probable scenario was for output to be at the lower end of that range. The result comes soon after iron ore prices surged to their highest level in almost a year last week, above $111 a ton, amid a shortage of world supply as China reopens its economy. China has been boosting imports for the key steel ingredient.
Moving on to the top news in the energy sector.
Iraq's crude oil exports have increased so far in July, according to shipping data and industry sources, suggesting OPEC's second-largest producer is still undershooting its pledge in an OPEC-led supply cut deal. Southern Iraqi exports in the first 20 days of July averaged 2.70 million barrels of oil per day, according to the average of figures from Refinitiv Aecon and two industry sources. That is unchanged from June's official figures for exports from southern Iraq. The Organization of the Petroleum Exporting Countries and Allies, known as OPEC+, began a record supply cut in May to bolster oil prices hammered by the coronavirus crisis. Iraq is cutting output by 1.06 million barrels of oil per day under the deal. The July figures imply Iraq is still some way from fulfilling its pledges and is exporting far more than a July loading program indicated.
We will now look at the top news in the agricultural sector.
China booked a small purchase of U.S. soybeans for the second day in a row, the U.S. Agriculture Department said on Tuesday. The sales were part of a recent string of deals with China, the biggest export market for U.S. farm goods. Private exporters reported to the USDA that China bought 126,000 tons of soybeans for delivery in the 2020 and 2021 marketing year that begins on September 1. The USDA also reported sales of 180,000 tons of soybeans and 207,880 tons of corn to unknown destinations. Since July 10, the USDA has reported China bought 3.259 million tons of U.S. corn, along with 1.298 million tons of soybeans and 320,000 tons of hard wheat.
Next we have agricultural price moves.
Chicago corn and soybean futures fell on Tuesday after the U.S. Department of Agriculture said the condition of both U.S. crops was better than expected. Wheat dropped as global demand was assessed and the U.S. harvest continued to progress rapidly. The Chicago Board of Trade's most active corn contract fell 1% to $3.32 minus 1/4 a bushel by 1100 GMT. Soybeans were down 0.6% at $8.93 minus 3/4 a bushel and wheat fell 0.3% to $5.20 a bushel.
We will now take a look at energy price moves.
Oil rose on Tuesday, helped by positive news about vaccine trials and an EU stimulus deal, taking prices to levels last seen when an oil price war erupted in early March between Russia and Saudi Arabia. Benchmark Brent crude was up $1.24 at $44.52 by 13:37 GMT, on track for its biggest daily rise since mid-June at around 3%. West Texas Intermediate gained $1.26 to reach $42.07, its highest daily rise this month at around 3.1%. Prices were buoyed by an agreement among European Union leaders on a €750 billion or $859 billion fund to prop up their coronavirus-hit economies, lifting prospects for fuel demand.
Moving on to metal price moves.
Copper prices climbed on investor hopes for a recovery in metals demand and the global economy after European Union leaders agreed a massive stimulus plan and positive news emerged about a coronavirus vaccine trial. 3-month copper on the London Metal Exchange rose 0.3% to $6,505 a ton in official trading on Tuesday, close to the 25-month high of $6,633 on July 13. LME aluminium rose 1.1% to $1,682.50 a ton. Zinc was up 0.8% to $2,218. Lead shed 0.4% to $1,833.50.
Iron ore futures rose on Tuesday, mirroring upbeat sentiment in Chinese equities and base metals markets, shrugging off Brazilian miner Vale's higher output in the second quarter. Iron ore on the Dalian Commodity Exchange closed 2.8% higher at 841 yuan or $120.32 a ton, after falling for 3 straight days. On the Singapore Exchange it advanced 2.4% to $108.60 a ton in afternoon trade, rebounding from a 4-day decline. China stocks rose 3% on Monday and were headed for further gains after regulators moved to bolster the market by lifting equity investment cap for insurers and encouraging mergers and acquisitions among brokerages and mutual fund houses.
Finally, we have the most recent news on the financial market.
The euro hit its strongest since early March on Tuesday after European Union countries struck a deal for a massive stimulus plan to revive their coronavirus-hit economies, while an upturn in sentiment sent the Australian dollar to a 1-year high. The EU deal, a compromise on concerns that thrifty northern states had about handouts for more profligate neighbours, was hailed as an important signal of unity by Europe's leaders and a foundation for economic recovery. The euro rose 0.2% to $1.1470 in Asian trading hours, its strongest since March 9. Gains were tempered by prior market expectations that a deal would eventually be agreed and the euro's recent run higher as the recovery fund was negotiated. The single currency was last up 0.1% at $1.1454. The dollar was flat when measured against a basket of currencies, and last at 95.675. The yen was little changed at 107.22 per dollar. That is all for today's news on the commodity market. Stay tuned to TradeFlow TV as we continue to provide you with more updates. You can also follow us on Twitter at TradeFlow TV1, which allows you to watch our program on your mobile device or desktop.